Hi everybody, you are on my channel and this video is about, it's like a complete guide to trading strategies. Okay, a trading strategy is different from a trading style. There are 4 high-level trading strategies that every trader should know. Discover the main tradings. We will discover the main trading strategies now. Okay, let's start with what is trading strategy. A trading strategy is a plan that employs analysis to identify specific market condition and price levels. While fundamental analysis can be used to predict price movements, most strategies focus on specific technical indicators. What is the difference between trading strategy and trading style? Also, there is a lot of confusion between style and strategy. There are some important differences that every trader should know. While a trading style is an overarching plan for how often you will trade and how long you will keep position open for. A strategy is a very specific methodology for defining at which price points you will enter and exit trades. A trading style is preferences, while trading the market or instrument, such as how frequently and how long or short time to trade. A trading style can change based on how the market behaves, but this is dependent on whatever you want to adapt or withdraw your trade until the conditions are favorable. Okay. Now we will talk about best trading strategies. The list of this, first is trend trading, second range trading, third breakout trading, fourth reversal trading, 5 scalp trading, 6 pairs trading, 7 arbitrage, 8 movement trading. And now we will talk about all of them. But first, trend trading. A trend trading strategy relies on using technical analysis to identify the direction of market momentum. This is usually considered a medium-term strategy, best suited to the trading styles of position trades or swing traders, as each position will remain open for as long as the trend continues. The price on asset can turn it up or down. If you were going to take a long position, you would do so when you believe the market is going to reach higher heights. If you were going to take a short position, you would do so if you thought the market would reach lower lows. Derivative and leverage products such as CFDs are popular choices for trend-following strategies because they enable traders to go both long and short. Here you would put up a small initial deposit, call it margin, to open a larger position. Note that leveraged trading is high risk and you could lose more than your initial deposit amount, because your total profit or loss based on the total position size. Make sure you have adequate risk management steps in place. Tent traders will use indicators through the tent to identify potential retracements, which are temporary moves against the prevailing trend. Trend traders will often take little notice of retracements, but it's important to confirm it's a temporary move rather than a complete reversal, which is often a signal to close the trade. Okay, range trading. Range trading is a strategy that seeks to take advantages of consolidating markets that the terms to describe a market price that remains within lines of support or resistance. Range trading is popular among very short-term traders known as scalpers. As it focused on short-term profit taking, however, it can be seen across all time frames and styles. While trading traders focus on the overall trend, range trader will focus on the short-term oscillation in price. They will open a long position while the price is moving between two clear levels and is not breaking above or below either. This is popular forex trading strategy, as many traders works off the idea that the very liquid currencies markets remain at a tight trading range with significant volatility in between these levels. This means that short-term traders can seek to the advantages of these functionals between known support and resistance levels. There are a range of other indicators that range traders will use, such as a stochastic oscillator or RCI, which identify overbought and oversold signals. Range traders will also use tools such as Bollinger Band or fractals indicator to identify when the market price might break from the range. Indicators, it's time to close the position. Okay, third is breakout trading. Breakout trading is very interesting. Breakout trading is the strategy of entering a given trend as early as possible, ready for the price to break out of its range. Breakout trading is commonly used by day traders and swing traders as it takes advantages to short to medium term market movements. Traders who use this strategy will look for price points that indicate the start of period of volatility or a change in market sentiment by entering the markets at the correct levels. These breakout traders can ride the moment from start to finish. It is common to price a limit entry, order around the levels of support or resistance, so that any breakout execute a trade automatically. Most breakout trading strategies are based on volume levels, as the theory assumes that when volume levels start to increase, there will soon be a breakout from a support or resistance level. As such, popular indicators include the Money Flex Index, MFI, on balance volume, and the volume weight moving average. Then, fourth is reversal trading. The reversal trading strategy is based on identifying when a current trend is going to change direction. Once the reversal has happened, the strategy will take on a lot of the characteristic of a trend trading strategies, as it can last for a varying amount of times. A reversal can occur in both directions, as it's simply a turning point in market sentiment. A bullish reversal indicates that the market is at the bottom of downtrend and will soon turn it an uptrend. While bearish reversal trading indicates that the market is at the top of an uptrend and will likely become a downtrend. So for this is all trading strategies that I want to tell about, and others you can watch in internet. It is very interesting trading and goodbye.